What if you could make the most of your financial situation so that you can pay your home loan off faster? What if you could save thousands, if not hundreds of thousands of dollars on your home loan? What if you could also set yourself up in life so that you can really start to build wealth? This is Pay It in 5. I'm Dr. Linda Hamilton. We paid our home loan off in 5 years. I wrote Pay It in 5 to share how you can pay your home loan off faster and make money work for you. Pay It in 5. How to pay your home loan off in 5 to 10 years. Written and read aloud by Linda Hamilton. Chapter 21. What types of home loans are available? There are usually 3 options available to borrowers on paying off their home loan. These are number 1, variable home loan, number 2, fixed, and number 3, a combination of variable and fixed loans. All 3 options contain advantages and disadvantages. We will consider some of these here. Number 1, variable. A variable interest rate is an interest rate that changes throughout the term of the loan in line with market interest rates. The main driver of market interest rates in Australia is the Reserve Bank, who set the cash rate. In other countries, this would be the respective central bank, and the data for this can be found on the web. If you have a variable interest rate, it's a good idea to keep an eye on the changing rates set by the Reserve Bank or the respective central bank for your country. This is because, generally speaking, changes to the official cash rate by the Reserve Bank can change the interest rate that a lender gives to you, which in turn may increase or decrease your interest rate. For example, if the Reserve Bank of Australia reduces the cash rate from 6% to 5.75%, lenders may then be influenced to change their market interest rates in the same direction, which in this example is down. But this may not always be the case. Lenders may keep their interest rates on hold, or worse, increase it even though there is a decrease by the Reserve Bank. The variable interest rate home loan is considered to have, on average, lower starting interest rates compared to fixed interest rate home loans, but not always, so keep an eye on this, as the risk associated with changes to the interest rate is transferred from the lender to the borrower. For example, a borrower with a variable interest rate home loan will wear changes to the interest rate. When the interest rate rises, you pay more, and when the interest rate goes down, you pay less. The advantages of a variable interest rate are: one advantage is you can usually make extra repayments, and therefore you may be able to pay your home loan off faster. A second advantage is when an interest rate decreases, you pay less interest, saving you money. A third advantage is that lenders often offer low introductory variable interest rates. And a fourth advantage is you may be able to use redraw facilities. The disadvantages of a variable interest rate are: number 1, your repayments rise when interest rates rise. And number 2, you may experience a decreased sense of security as expenses may change when interest rates change. A honeymoon loan, a variation of the variable interest rate home loan. A honeymoon loan is a variable interest rate home loan that has a competitive interest rate, usually much lower than the average standard interest rate that lasts for a specific period of time, such as 1 or 2 years at the beginning of the home loan. This lower interest rate period is known as the honeymoon period, and after this time, and for the rest of the life of the loan, the interest rate rises back up to a higher rate, sometimes higher than the standard interest rate. Variable rate changes still apply. They simply apply at a reduced interest rate for a small period of time during that honeymoon period. A honeymoon loan can seem very appealing. However, Since the honeymoon period only lasts a short time, usually less than 3 years, your loan will default back to a higher rate. If you plan to pay out your home loan over a short period, for example 5 or 10 years, a honeymoon loan may be beneficial for you. If you plan to pay your home loan off over many years, for example over 15 years, a honeymoon loan may not be suitable unless you can negotiate a competitive interest rate once the honeymoon period has finished. Check with your lender. Fixed interest rate home loan. A fixed interest rate home loan is a loan in which the interest rate and repayment amount remain the same for a set period during a loan. When the set fixed period ends, the interest rate changes to a variable interest rate, or it can be fixed again if the borrower chooses. A fixed interest rate loan is considered to have, on average, a higher starting interest rate compared to variable interest rate loans, but not always, as the risk associated with changes to the interest rate remains with the lender. For example, a borrower with a fixed interest rate will not be affected by changes to the variable interest rate. The advantages of a fixed interest rate are: Number 1, a sense of security and certainty, as you know your repayment amount is stable for the fixed period. Number 2, it allows you to budget, as you know how much and when to make repayments towards your home loan. And number 3, should interest rates rise, your repayment would remain the same for that set fixed period. The disadvantages of fixed interest rates are: Number 1, you may not be able to make extra repayments, so you may not be able to pay your home loan off faster. Number 2, if you want to make extra repayments, they are generally met with additional fees. Number 3, should interest rates fall during the set fixed period, your interest rate and repayments will remain the same at the higher interest rate. And number 4, a fixed interest rate home loan is generally not as flexible as a variable loan. Combination of variable and fixed interest rates. Lenders may also offer loan products where the interest rate is split between variable and fixed rates for a given period. This means that one portion of your loan would be fixed, while the other portion would be influenced by variable interest rate changes. One advantage of a combined variable and fixed interest rate is your loan is always partially suited to the economic situation, such as changes to the interest rate. One disadvantage of a combined variable and interest rate is you may not receive the full benefits of a variable or fixed loan. Which loan did we choose? Our main objective for our given situation was that we wanted to make extra repayments on our home loan without being penalised by fees, and we wanted redraw facilities available to us. At the time we were searching for our home loan, a variable interest rate home loan was the only means for achieving this, so that's what we chose. At the time, variable interest rates were also lower than fixed. Should interest rates fall, we would benefit, and should they rise, we would wear the costs associated. We also opted for a honeymoon loan, as we were advised by our lender that if we were to make good repayments over the initial honeymoon period, we would be able to negotiate a better loan thereafter. Check if your lender would do the same before deciding to sign up for one. We were planning to make good repayments, so negotiating again during the end of the honeymoon period was ideal for us. At the end of the honeymoon period, we were able to negotiate a comparable loan again. Your situation may be different, and the market may be different. For example, there have been times when fixed rates have been lower than variable rates. Check the market, analyse your situation, and choose which option suits you the most. A combination of fixed and variable may also be suitable, or simply fixed may be suitable. Whatever loan option works best in your situation works best for you. Try to choose the option that benefits you the most. And when it does come time to buy your property, there is one hidden surprise that may be in store for you. Up next. If you'd like help to plan your home loan and how you can make it work for you, head to payidin5.com/coaching to book a time to chat with me or the team. In life, you get what you spend your time doing. You've just spent your time learning how to pay your home loan off faster. Head to payidin5.com to book your session and make money work for you.